influence. And a defiant Menendez says he will not resign his seat as New Jersey senator, despite being called upon to do so by the governor of New Jersey and other members of the Democratic Party. Well, screenwriters appear to have reached a tentative agreement with the major entertainment studios and the streamers on a new labor deal just last night. Now, one big obstacle stands in the way of the film and TV industry roaring back to life, and that is ending the strike with tens of thousands of actors who are members of the SAG-AFTRA union. Fox News announced that California Governor Gavin Newsom and Florida's Governor Ron DeSantis are going to debate each other in November. Now, this is highly unusual for governors who are not running for the same office to debate each other. But we know these two governors have clashed repeatedly over issues as broad as immigration and COVID-19 and the best way to address the pandemic. DeSantis is running for president, and as far as we know, Gavin Newsom is not. 1 week before Election Day 2020 and just over 2 months before the January 6th attack on the Capitol, an internal FBI analysis concluded that domestic violent extremists were very willing to take action in response to a disputed election, but that law enforcement preemption and the disorganization of extremist groups likely would hinder widespread violence. Well, we now know that they were wrong. And House Speaker Kevin McCarthy's attempt to avoid a government shutdown just became more complicated after former President Donald Trump stepped in to endorse the tactics of far-right House Republicans who prefer to see a funding lapse, i.e. shut the government down, then compromise with the Democratic-led Senate and White House. There's a creeping fear inside Joe Biden's circle that the greatest threat to his reelection may come less from the Republican nominee and more from minor party spoiler candidates. In a new national NBC News poll, Joe Biden is tied with former President Donald Trump, the frontrunner for the GOP nomination. They're both tied at 46%. Now, that's in a head-to-head matchup. But when you add in third-party options and those who were polled are asked to consider those options, Donald Trump leads Joe Biden 39 to 36%. You're listening and watching Areva Martin in real time, and I'm your host, Areva Martin. This is your one-stop destination for today's trending news, expert analysis, and my unfiltered opinions. This is hour 2 of Areva Martin in real time, and this is the hour where we go deep. We dig behind the headlines, and we bring you those stories that are making the headlines and stories that have big impact. That is, they impact the lives of not just the Washington elite, but also the lives of everyday people. And today we're talking about an issue that's near and dear to my heart as a civil rights lawyer, and that's housing inequality and the impact that this persistent discrimination that we see in the housing market, the impact that it has on the Black-white wealth gap, and the amount of equity that Black homeowners lose in this country simply because homes in Black neighborhoods are undervalued. One report says that after accounting for factors such as housing quality, neighborhood quality, education, crime, owner-occupied homes in Black neighborhoods are undervalued by $48,000 plus. Now, that's just on average. So there's some homes that are undervalued at a lot more. But overall, this undervaluation amounts to a whopping $156 billion that homeowners would have received, that is Black homeowners, if their homes were priced at market rates. What is driving this persistent inequality in the housing market that is also creating this incredible 10-to-1 gap in wealth between African Americans and white Americans? We know that home ownership is one of the biggest ways that individuals build equity. And equity in homes funds everything from college tuition, pays for weddings, often is the way that entrepreneurs start their first businesses. But if you're African American and you're not able to purchase a home, you don't have an opportunity to grow equity, to have access to that extra cash that you may need to start a business or to further your education. And if you are lucky enough that you have a home and it's in a Black neighborhood, your home's value may be less than someone that's just 2, 3, 4, 5 miles away from you with a house that doesn't even compare in size and quality as yours. And that is simply because your home may be in a Black neighborhood. Well, in this hour, we're talking about housing inequality, why it has persisted in this country, the impact that it has on wealth and the wealth gap, and what can we do to address this inequality. I'm super excited. My guest today, one of my returning guests and one of the nation's leading housing experts, so much so that Joe Biden just gave him a shout out in front of 4,000 or 5,000 people over the weekend. We're going to hear about that. But Dr. Andre Perry is with us. He's a senior fellow these days at the Brookings Metro. He has a very extensive resume in terms of writing and research and publishing on the issue of housing inequality. And also joining us in this hour is Faith Weeks. She's the Community Development Advisor for the Federal Reserve Bank of St. Louis. Before we're going to talk to Dr. Perry and Faith about what is causing this level of housing inequality and what do we do about it? Stay with us. KBLA Talk 1580. Of Areva Martin in real time, and I'm your host, Areva Martin. And in this hour, we're going deep on the issue of housing inequality. Joining me in this hour is one of the nation's or the nation's leading expert on race and housing issues, Dr. Andre Perry, who is at this moment a senior fellow at Brookings Metro, and also in this hour, Faith Weeks, a community development advisor at the Federal Reserve of St. Louis, joins me. Welcome both Dr. Perry and Faith to the program. Dr. Perry, it's been a minute since you and I last talked, so why don't you give us a sense of where we are in terms of the inequality between Black and white home ownership and this valuation issue, this undervaluing of Black homes in Black neighborhoods that's causing us to lose a whopping $156 billion. Talk about that, and also tell us why Joe Biden on Saturday night before 4,000 or 5,000 people at the Congressional Black Caucus dinner gave you such a great shout out.
Yeah, Areva, so always a pleasure to be with you and talk to you about these important issues. And also just to remind folks that home ownership is not just vital to providing shelter, it is the engine for so many other issues. The way we fund policing, community services, education is all predicated on housing. Now, most people look at the state of housing by examining the home ownership rate. And although the home ownership rate has risen a little bit over the last few years for all races, the Black home ownership generally is around 44% for African Americans, and it's 30 points higher for white Americans. And that 30-point difference has been pretty consistent. We know that we're still around the same rates as we were in the 60s when the Fair Housing Act was enacted. And so we still have a significant ways to go. And I always put it in perspective. For most of America's history, it was legal to segregate African Americans. And much of the subsidies that many white Americans enjoyed, particularly after the Great Depression, as part of the New Deal, African Americans could not. But as it pertains to value, and this is where President Biden gave me a shout out, most people recognize my work by my examinations of looking at the value of homes in Black communities compared to those where the share of the Black population is less than 1%. Now, I don't want to get too empirical here, but without controlling for, meaning attending to, statistically speaking, crime, education, things like that, the gap is about 50%, meaning homes on average across the country are valued about 50% less, 340,000 compared to roughly 180,000 for African American homes. But a lot of people will say that's because of education, that's because of crime. But those are things you can control for in a study, and that's what we did. We control for education, we control for crime, we control for walkability and all those fancy Zillow metrics. So we can get an apples to apples comparison between homes in Black neighborhoods and homes in white neighborhoods. And what we found pretty much astounds that homes in Black neighborhoods are underpriced after controlling for education and crime, all those things, still underpriced by 23%, about 48,000 per home. Cumulatively, there's about 156 billion in lost equity in Black neighborhoods. And this is what Biden repeated during his address at the Phoenix Theater for the Congressional Black Caucus Foundation annual awards or annual legislative caucus. And I just want folks to hear what that means, put it in perspective. 156 billion would have financed more than 4 million Black-owned businesses based upon the average amount Black people used to start their firms. It would have paid for more than 8 million four-year degrees. It would have replaced the pipes in Flint, Michigan 3,000 times over. It would have covered nearly all of Hurricane Katrina damage. It's more than double the annual economic burden of the opioid crisis. It's a big number. And I put that in perspective because when things go wrong in Black communities, oftentimes we blame Black people. And we don't look at the systems that extract wealth and opportunity every day without anyone wearing a hood or carrying a tiki torch. And this is why I say that there's nothing wrong with Black people that ending racism can't solve. And so for me, I'll close with those stats, but it's not just about this appraisal gap, just is not about material wealth. It's about having the tools to lift ourselves up by our proverbial bootstraps to get economic mobility, social mobility. And so we got to correct for these drags on our housing markets that rob individuals of wealth.
I want to get Faith, and I've been incorrectly stating her as Faith Weeks, and my producer just told me it's Faith Weekly, so I apologize for that, Faith. But before I get you into this conversation, Dr. Perry, so what did Biden say? He cited this number, and then what did he say he's going to do about it, if anything?
Yeah, he cited the numbers, and then he also brought up the fact that his administration, through HUD, instituted the Property Appraisal Valuation Equity Task Force. And it is an interagency task force that last year issued about 23 executive actions to end appraisal bias. Now, a lot of those things are actually being implemented as we speak. Secretary Marcia Fudge announced earlier this year that there is a new process to get essentially a reassessment of your home value. If you think that you are being lowballed, there is a new process so folks can get another appraisal, which was hard to come by. As many people know, once that appraisal company issues that number, it's hard to come by. So we have that. And in addition, there's an effort to diversify appraisers. Now, I want to just put a pin in that because, yes, there is certainly a problem with the diversity of appraisers. About 90% or more appraisers are white, 75% male. But with that said, it's really the price comparison model that's at what's the problem, and that for your listeners, it's the method used to establish value. You compare one home to another in a neighborhood to get a sense of average price. But why that's problematic for Black communities, if you compare one home to another in a community that's been discriminated against, you effectively just recycle the discrimination over and over again. So you can be a Black appraiser, you can be a Latino appraiser. If you're using the same practices,
Right.
you're going to get the same result. And so that's why a lot of us work on structural racism, but it's harder from a legal standpoint. As you know, that most of our tools on discrimination is more about individual acts of discrimination. It's not about these acts that go against entire communities. And so
because basically what you're saying is the community has not had the proper level of investment, and that's going to not bode well in terms of using this formula and getting government or private industry to invest in these businesses could take presumably decades,
right.
if not longer. So let me, Faith, jump in here. What is the Federal Reserve Bank doing other than raising interest rates and making it more difficult for people to buy homes? Putting that aside, that's not you, so I'm not faulting you. But what role does the bank play in addressing some of these inequalities?
Before I answer your question, I have to provide this disclaimer. The views I express in this interview are my own and do not necessarily reflect the views of the Federal Reserve Bank of St. Louis. So there is a law called the Community Reinvestment Act that banks must basically serve all the needs of their customers, including those who are low to moderate income. And the three regulatory agencies, the FDIC, the OCC, and the Fed, will be releasing CRA modernization more than likely in the last quarter of this year. And hopefully that update of the act will address some of the lending issues that we've seen with banks.
Okay, and how can that, Dr. Perry, like, what can regulations do? Because there are laws on the books already. There are anti-discrimination laws that already exist in federal statute and most states. California has something called the Unruh Act. We have FEHA. We have other statutes. So, what role, can any kind of federal statutory scheme or regulatory scheme play in addressing these issues?
Well, we certainly have regulatory agencies and various acts. The real estate industry is one in which a lot of it regulates itself. I mean, I'll bring up appraising again. If you looked at the put this in air quotes, the accountability system for appraising, there's really not a firm way to hold any one appraiser or appraisal system accountable to these acts of discrimination writ large. I mean, you have the OCC, you have the Appraisal Institute, you have federal, state, and local bodies, and it's really unclear. And then on many of our tools, there's just simply not enough teeth. As was mentioned, Faith mentioned the CRA. That was really a tool designed to incentivize banks to invest in communities. If they don't, and we've seen more and more banks literally move out of Black communities at higher rates than other places, it's really hard to hold a bank accountable using that tool. I mean, we certainly.
So help me understand, Dr. Perry. So the community, the CRA, I've always thought was designed to invest in, communities of color, Black communities, and you're saying it wasn't really designed to do that or to incentivize homeownership?
But I would say it was more a tool to incentivize banks to invest in communities rather than to punish banks for not.
Oh, I see. Okay. So there's
Right.
not a lot of teeth in it. So
Right.
they encourage you, but they don't really take action if you decide you don't want to do it.
And I know Faith wanted to jump in on that because that's really right. Go ahead, Faith.
Yeah, I mean, there are penalties when banks basically receive a they can receive a needs to improve or satisfactory, but that does hurt their chances of being approved for basically if they want to acquire another financial institution. But I do want to say there is a tool under the Equal Credit Opportunity Act, which is special purpose credit programs. And those were designed really to address the inequities in lending to those who have been basically historically marginalized in lending. So we do recognize that inequity is baked into our housing and finance systems. And that's why there really is a need to dismantle a lot of these traditional systems and build equitable financing tools.
So what system in particular, Faith, do you think needs to be dismantled?
Well, like credit scoring models, a lot of them favor basically white people. I mean, if you have limited credit, most people, not most people, but there is a larger percentage of Black and Hispanic borrowers who might not have a traditional credit history.
Right.
Just recently, we know that Fannie Mae basically instituted their positive rental payment in terms of counting rent payments in credit score, and that seems like it's making a difference, a positive difference.
Hold that thought. When we come forward, we're going to talk more about ways that the banking industry itself, as well as other governmental bodies, can have a positive impact on housing inequality and what this means, particularly for young college students who are graduating and hoping to get into the housing market. Stay with us, KBLA Talk 1580.
If you think about KFI, well, KFI only has like a 3% Black listenership. 3%.
We are back, and in this hour, we are talking about housing inequality and how it impacts not only the shelter that Black folks have, but also the wealth gap. Dr. Andre Perry is with us. He's a senior fellow at Brookings Metro and Faith Weekly. She's a community development advisor at the Federal Reserve Bank of St. Louis. So, Dr. Perry, lots of, I guess, things are in our current regulatory body, in our current statutory body, as it relates to trying to incentivize, trying to prevent the discrimination of housing. But the numbers that you cited that the president also gave during that speech on Saturday, we're not seeing a lot of change. And it's not like these laws are new. So a lot of these laws, a lot of these policies, a lot of these regulations have been in existence for a while. So if that is the case, why do we have this persistence of inequality?
Because wealth begets wealth. And if you don't have it, it's really hard to change anything. I want to lift up something my co-guest Faith brought up. And this is around special purpose credit programs and why I think we all feel that there's an opportunity here. Faith mentioned that maybe a year and a half ago, Freddie and Fannie, or the government-sponsored enterprises, Freddie and Fannie, started to incorporate rental payments in their underwriting practices. And why that is important. So now when they're considering, are you eligible for a mortgage, you can have that track record with you. And so now, and there have always been what we call these special purpose credit programs that can be used for people who've been discriminated against, or groups that have been discriminated against. But now you can actually expand these programs to include mortgages without using a down payment. And that's where racism, discrimination really shows up for Black people. The lack of a down payment, because their grandfather did not provide, our grandfathers did not provide that intergenerational wealth transfer that came from owning a home, which often came from federal policies that which Black people were denied of getting. So the wealth gap is not by accident. So in order to get more assets, you have got to create mechanisms so that people can actually own things. So these special purpose credit programs, for me, are an opportunity. Bank of America announced earlier this year that they were going to expand these in 5 markets, but more banks can do more of this all around the country.
Are you seeing, Faith, with these special credit programs, dramatic increase in Black folks who are getting mortgages and buying homes?
I don't have the numbers to substantiate that, but I feel as though it's going to take some intentionality, and there is change going on right now. The Homeownership Council of America is a national nonprofit that helps banks provide technical assistance to them if they want to design an SBCP program for mortgage lending. And they've designed this actual certification trademark in conjunction with Realtor.com, that let's say if you were a first-time home buyer, you can go on Realtor.com's website and look for a lender that has this trademark. Or if you're looking for a lender, if you're shopping for a lender who you feel is going to be consumer-friendly and offer a SBCP, you can look for this trademark. It's just like Energy Star for those looking for energy efficient appliances. But in this case, it's going to let that consumer know that this is a lender who has a special purpose credit program that will address perhaps some of the challenges that Dr. Perry was talking about. So I think in this time that we have to be intentional with designing tools that will really address the persistent barriers that buyers of color have faced.
So great. Sounds like you both are on board. You think this, this credit, special credit programs offers some opportunities to get more Black folks into homes. Obviously, if you don't need a down payment, if they're taking into consideration things like your rental history, that's going to mean more people will qualify. But Dr. Perry, what we keep hearing over and over again about this generation of millennials, Gen Zs, how they are not, in many cases, able to purchase homes, that they have more student loan debt, or they have high student loan debt that prohibits them from getting into the housing market, and that many of them will not do as well as their parents. What are you thinking about young folks graduating from college now and their prospect of home ownership?
Yeah, one of the bright spots during the pandemic is that we actually saw an increase in home ownership for millennials. Now, a lot of people will say, well, how did that happen? And you mentioned an aspect of it. We started to freeze student loans. Mm-hmm. There was also additional savings. People weren't going out and buying things, particularly folks in central cities. So you had greater savings. You had effectively created higher debt income ratios, or better debt income ratios, I should say. And so what we should learn from that is that, hey, let's figure out ways to cancel debt for African Americans, because again,
we just tried that, Dr. Perry. That didn't go over so well.
Well, but we tried it in a specific way. There's other way. What we did learn is that there's one way we cannot cancel student debt, but we need to create new mortgage products, and this was special purpose credit programs can do. We may be able to create a bundled package that includes student debt cancellation and a new mortgage product. So we just need to get creative But I would be remiss if I didn't say this. So much of the home ownership issue is pinned on housing markets. We also need to make sure wage inequality is erased. We need to make sure that tax assessments are proper. Like there's an entire ecosystem of things that need to happen. Homes will never be affordable if our wages aren't where they need to be. So yes, housing needs to play its part, but all these other sectors need to do theirs if we're going to close these gaps.
Okay, you just mentioned, and it's being somewhat facetious, tongue in cheek, but Biden did, through executive order, try to eliminate up to a certain amount, $10,000 student loan debt, and it was challenged and, has not been able to move forward in the Supreme Court. So you say there are other ways to do that. What do you see as the other ways to do that?
Well, we actually have already seen millions of borrowers, their debt, hundreds of thousands of dollars, their debt canceled because of many of the pernicious colleges and universities that were essentially giving bogus degrees for the most part. Those student loans canceled. We've seen student loans canceled for military folks and others, individuals. So I think that the path forward will instead of going sort of a mass blanket debt cancellation, they're going to try to focus in on specific groups that can lay claim to why they should have their debt canceled. But this is a battle that's also going to occur in terms of medical debt and other things that are hindering home ownership.
Yeah, when we come forward, I want to talk about, again, I'm so worried about young people and all the reports about how they are going to fare in this economy with, as we talked about, wages, healthcare, and housing. Three costs that can be incredibly exorbitant and make it difficult for young people to get into, even break into the housing market. Stay with us. KBLA Talk 1580.
Raise social.
I'm back, and I'm talking with Dr. Andre Perry, a senior fellow at Brookings Metro, and Faith Weekly, a community development advisor at the Federal Reserve Bank of St. Louis. So, Dr. Perry, I'm very interested in what's happening with millennials in the housing market, and I'm looking at an article that said that increasingly investment companies and real estate investors are buying up what otherwise would be starter homes, leaving millennials to buy more expensive first homes. That's creating issues and locking out a lot of millennials. Do you agree with that assessment?
Yeah, there are many of these sort of companies that essentially buy up large swaths of property, in particular neighborhoods, because these homes are devalued. Remember that my research shows that it's the share of the Black population that lowers the value. So oftentimes companies buy the properties and put in the investments and sent many other higher income folks, whiter communities to those neighborhoods. And you see a rise in the property values almost overnight. Mm-hmm. And that economic pressure pushes out many lower income folks and pushes out people who actually have the income, but don't have the product, don't have the home, the low dollar amount home to purchase. So I do agree with this. There's a debate in this around this issue regarding how big of a problem this is. I see it as a problem impacting Black neighborhoods because of the devaluation issues that we talked about.
And Faith, what about some of these alternative homes? Is this really going to be a a strategy, LA, California in particular, because of the growing issue of homelessness. They're looking at these tiny homes, ADUs, homes that are built in the back of, say, a main house. They're thinking about changing zoning laws so that a neighborhood that has single family houses can now maybe have a fourplex or maybe even apartment buildings. Are some of these alternatives the way to go in terms of, again, addressing some of these disparities?
I think that at the local level, localities do have to try to be more creative and innovative in addressing the housing shortage. That's a crisis in and of itself. There is an affordable housing crisis, and there's not enough supply.
What do you feel about those alternatives, Dr. Perry? Is that going to close or get us closer in terms of, this widening wealth gap if Black folks are going to start living in tiny homes or, homes in the back of the front house, they're in the back house? Are these alternatives a solution to this issue of housing inequality?
Well, as Faith mentioned, there are many problems going on at the same time. We have a density problem. One of the reasons why it's harder to get affordable homes is because we aren't allowed to build more homes. So there's limited supply. People, the housing becomes more expensive. And so we do need to change zoning laws that are rooted in discrimination. We know that many of the zoning laws that were enacted in the early parts of the 20th century was instituted to keep Black people out and to do the same thing that they do now, to not allow for more units in an area. So that is part of a solution. It is not the whole solution. We also need to have the funding to create the supply. We also need the income so people can purchase homes. We also need the mortgage products that we don't have. We may need new forms of ownership. We see community land trusts where there's sort of a shared sense of ownership, a co-op model, models in which you can own the property and not the land. So there just needs to be a suite of new ideas that address a multifaceted problem that manifests itself in a home ownership and a wealth gap.
So, Faith, obviously, the Federal Reserve Bank has been raising interest rates to address or try to arrest inflation to prevent there from being widespread inflation. But we know as they are raising these rates, again, that's impacting mortgage rates. So what happens to this income or this housing inequality in these periods where we see these rising interest rates?
Well, it definitely has a greater impact on people of color. The higher the rate, the less home you can afford. So localities might have to allocate more money to down payment assistance. Mm-hmm. It's really, as Dr. Perry emphasized, it really is no silver bullet. It will take really comprehensive and a multifaceted approach to really close or to narrow the racial homeownership gap.
And so when I think about that, Dr. Perry, that's kind of depressing because we know this country doesn't do comprehensive very well, definitely doesn't do comprehensive well when it comes to the Black community and addressing, because we started this conversation talking about what impacts the valuation of Black homes, everything from the investments that are made in a particular neighborhood. And so, who should we be looking to in terms of that happening? Depending on who's in office in the White House, there's more of an appetite for this than not. Private companies that we saw step up after George Floyd's murder in 2020 seem to have retrenched. So what realistically over the next 5-10 years can we look to, if anything, that might have a significant impact. And again, I'm really interested in this wealth gap because, again, as you said, home ownership is the way that many people build that intergenerational wealth. So if I don't have a home to pull out equity to send my kids to college or to help my kids start that first business, then they are automatically disadvantaged.
Well, since 2020, I think you've seen a greater appetite for people to mobilize and organize around specific issues. And that's what it's ultimately going to take. I mean, this is a power issue that in order for us to get the kind of structural changes, people will need to rally for the policies that they need. And there's no way to get around that. And we're seeing it in the labor movements. We're seeing it in the racial reckoning. We're also going to need to see it in housing. And one other thing I just want to make a point, and this might sound antithetical to improving housing. We also need to have other forms of wealth building that are not about home ownership. You may have in other programs talk about baby bonds, this idea where where every American gets a savings account at birth and the federal government pours some money into it. My colleague Derek Hamilton of the New School talks about this a lot. But the point being is that wealth stemming from home ownership is not growing at the rate of other forms of wealth building. The rate of
now, is that because, why is that? That's an interesting point you just made.
Oh man, I mean, tax code changes have a lot to do with that. We've created tax advantage programs essentially for the wealthy that they can build upon their capital. So that's
let me stop you right there real quickly because we're going to run out of time, but I do want you to answer this. There are people, investment types, financial types that say that home ownership is not an asset that you should look to build wealth. Do you agree with that?
I don't agree with that. This is one way to do that. You should have a portfolio, a diversified portfolio, including retirement savings, home ownership, business ownership, and let me bring up some commercial real estate ownership. There's other things that you need to but to put all of our eggs in one basket, you know what will happen? A housing crisis. This happened in 2017. 50% of Black wealth evaporated. And so we need to expand our wealth building options to protect ourselves and just to deal with the realities that home ownership, particularly in some markets, won't provide the yields as they did in the 40s, 50s, 60s, and 70s.
Right. Okay. A good point. Just, if you turn on your social media accounts, there are oftentimes people, some more experienced than others, who are telling folks not to buy homes, that home ownership is not a good investment. And I was curious to get your take on that, given all of your experience. We are out of time. Such a great conversation. Always a pleasure to have you in conversation, Dr. Perry, and a pleasure having you as well, Faith. The conversation we're going to continue to have. Obviously, this issue, this problem is not going anywhere. Again, thank you for your time and your expertise on this issue. Next voice that you hear will be Robin Ayers and the Raw Report right here on KBLA Talk 1580.
Gotta stay fresh, my house shot with a rest bar,
Have you visited us online for the grand opening of KBLA.store? For the best in new merch, gift ideas, books, media, and more, log on to KBLA.store. Be sure to check out our KBLA team favorites at KBLA.store today. That's KBLA.store for all the official merch on your favorite talk radio station, KBLA Talk 1580.